All right, everybody, welcome to Azizi Podcast. I'm Samir Azizi, and here with me today is the returning guest, Julien Brault, and we will be talking a lot about startups. And first of all, welcome back, Julien.
Thank you for having me.
It's been 2 years, almost 2 years since we last spoke about Hardbacon, about your path in the startup world. And even then, I already said, even like titled that episode, how to start the podcast in Canada during a recession, right? So even during like 2 years ago, we already talked that times were hard. Um, so a lot has happened with Hardbacon, and a lot of like things did not go as planned, I would say. And I'll just will let you take over and basically ask you, please give a brief summary what Hardbacon is and basically what happened to it, and then we can go further.
Yeah, so basically, our bacon is first, it's an app that allow Canadian to do budgeting and also will recommend the best credit card based on the spending behavior as it connects to the bank account. So that's on the technology side. On the website, we were doing a bunch of content about any question people could ask about personal finance. We had like calculators. So basically, your goal was to help Canadians make better financial decision. And we, at our peak, we have an audience of 400,000 active users in Canada. So that's the short version.
Thank you. It's so I received this email a couple of weeks ago, or even maybe like more than a month ago, about the fact that Hardbacon has filed for bankruptcy. And I received the email because I was an investor as well. I just put a little bit of money, nothing serious, so didn't really affect me in any way. But the email was extremely sad to read. To be honest with you, I didn't even finish it. Like I read the first couple of
Really?
paragraphs, and you said like I've staked everything on it, even my personal thing. Like I think I'm gonna be filing for bankruptcy myself, and I just couldn't read further. I'm like, I cannot read this. This is too sad. So I didn't, But then like what inspired me to reach out to you to do this podcast is I saw that you're becoming active on LinkedIn, you're exploring different things. I felt like there's something, and I realized like, well, listen, this just to make sure, Hardbacon filed for bankruptcy, so it's essentially it didn't work out, just like as a lot of other
Yeah.
startups. And
Yeah, I didn't bring home the bacon, that's for sure.
well, I think in a certain way you did bring a lot of bacon, through having this company, through paying tax, through hiring employees, through paying, your employees and all of that, through trying to maintain the business going. So in my opinion, this and having a podcast, we did business together on the side with my other companies what I was working on. So like it was a lot of good things that came from it. A lot of people got their good credit cards, good crypto companies and all of
Yeah.
that. So I think on the net, you've brought positive things to society, to the Canadian society. That's my personal opinion. And
Yeah, a startup is risky, so it doesn't always work out. But for investors, and you were one of them, I was the largest shareholder, and so everybody lost their chip. But yeah, we did help a lot of Canadians bring home the bacon, just not the shareholders, unfortunately.
that is true. And so my question to you is, how are you doing? How are you feeling mentally? You just went through this weird situation and you're probably still going through it.
Yeah, it's there's a feeling of loss when you like for any failure, like people, if they get divorced, they have a feeling of loss. If they so a business is something usually like founders are working an insane amount of hours, a lot of sacrifice, and then your life change because you move on and it's no longer. But I would say that like the filing for bankruptcy was not the saddest thing because the process of grief start by denial. It's like, oh, I have a solution. I have a magic trick of my hat and so on. So at this point, when you file for bankruptcy, most of the time is because you reach acceptance. Like the business is no longer sustainable. You owe money to different institution, and you realize, okay, it's just unsustainable. It's not possible to pay back this money, and the solution is unfortunately to file for bankruptcy. So after that, like I felt good. The difficult time was, the I would say like the 10 months prior to this conclusion was pretty rough time. And also you don't have time to feel miserable because you're extremely busy trying to save your company.
Hmm. And so would you say like are you still grieving right now, or how are you kind of like accepted and moved on? You've mentioned also
Yeah.
that you stake a lot of your personal savings on that, and it's just like it sounds very hard and it's frustrating, and like how are you handling this mentally?
No, I mean it's a gift not to have, like, when you have stuff to lose, you start stopping taking risk, and so I'm back at everything is possible. I have nothing to lose. So obviously I'm not starting a new business. Like I started a newsletter called Global Fintech Insider, but it was, it's more to keep busy and, like, experiment and have fun. But yeah, like I'm doing well, and like, yeah, it's pretty much over accepted, and it's part of the risk. If you cannot accept that it might be a failure, don't start a startup. Most startup end up closing doors. And I guess like every founder is kind of delusional, saying, "Oh, it happens to other people, but I'm smarter." You know what I mean? But the fact is, especially like, founders that are either VC backed or raise money and end up doing something in the technology space, most of them are pretty smart.
Right. So you're saying like you're not gonna start another company. Is that where you're like drawing the line? You no longer want to be in the business of
Oh,
entrepreneurship?
no, I'll definitely start another company, just not now.
Okay, so you're still seeing yourself as an entrepreneur. You wanna try something more in the future. Like you feel like you will do something else as a new startup in the future. Like
Yeah, I
this
will.
failure did not kind of like turn you away from that path, entrepreneurship.
No, I would say, like, the amount of effort, like it was 7 years of really intense work. So I'm going to be more selective about, having, like, what do I understand that other people don't understand? So I'm more difficult in terms of criteria to launch. And for now, I'm actually looking for a job, but, and I'll be, and, in my interviews, I'm pretty upfront that, like, for the next 2 years, like, I'm looking for a job. Eventually, I'd like to start another business. And I would say that, like, entrepreneurial companies really like hiring entrepreneurs and are really okay by the fact that, I'm not going to die into their employment, and larger company might not like it, but anyway, like, I'm upfront. So and it depends, like, like Shopify, for example, very entrepreneurial. uh so I do think, I didn't interview at Shopify, but I think it would be very fine with someone, who says, yeah, like, in the future, I'm going to launch a company, like, not now. I'm not going to leave, after 2 months and waste your time. And other big company might not like it, and to be honest, I don't really want to work for a company that is not entrepreneurial.
That makes sense, and I tend to agree with you on that as well. Um, what would you say was the biggest sacrifice that you've made to start or to grow Hard Bacon?
Well, I mean, it's
The
a
personal
sacrifice
personal.
that comes with working, 60 to 90 hours a week. Is just, like, you don't have time for people, you don't have time for hobbies and, like, a lot of stuff. But yeah, like, that's another reflection, is like, this is self-imposed. There's no law that says startup founder, cannot go hiking. You know what I mean?
Mhm.
So, like, another thing it taught me, it's like, I'm not saying if I launch a startup, I'm just going to do, and I hear, like, this movement. There are people that say, oh, you don't need to work more than 35 hours. I don't think, if people are geniuses and they can build, large business 35 hours a week, good for them. I applaud, and it's great. I do think it's, especially when you start from nothing, sometimes you really need to put the sweat and blood. But I do think it's really important as a founder to take care of your own health, balance. So this, I'm more aware of it. And also, as you age, like, when you're in your 20s, you can just, like, work all night and work the next day, and, you get older and you realize, you're immortal like everybody. So for sure, I think I'm gonna take care more of myself. But yeah, like, I don't think, if you launch a startup, you just accept that you're going to do hard things for sure.
So we haven't spoken about that, but like the main driver behind, this business not succeeding is a lot has to do with Google, right? Could you elaborate on that?
Yes, so I mean, for people that most people are not familiar with SEO at all, so it's called search engine optimization, and basically is trying to get found on Google search, which is 90% of market share of search. So in September 2023, there was an update, so a change in the Google algorithm, and basically it resulted in us losing 97% of our search traffic. Ultimately that caused the end of our company. I'm not saying like there's always a responsibility. Like obviously that was or from far our largest marketing channel, so that was a vulnerability that we had. And it was linked to the industry, like in the affiliate industry. I know you come from the affiliate world. You need high intent people that are actually looking for a credit card or an insurance policy, and not just waiting to be entertained, like the traffic that come from social media. So it did make sense for us to really be big on that. But obviously, like when I start my next business, I could just decide if a business require to have to depend so much on Google, then I'm not going to start this business. I'm going to let someone else take the risk. And other things, like obviously the other part of our business was the connected experience where you connect to the app. And this, if I convince enough people, if I had 1 million people logging in my app every single day, I wouldn't be bankrupt. And this, I'm not saying it's not my fault, but we had issues with the lack of good banking connection in Canada because there's no open banking. But
Yeah, you mentioned the last
now,
time you guys are just you guys were scrapping the information, right? Like scanning it and kind of transferring it, but not really like API connection or something like that.
yeah, because they don't have API in Canada. But what I now looking back, I should probably have switch market much faster. Like probably like I could have decided, okay, Canada is not a good market for me, and let's launch this in the UK. It's going to work wonders. I don't know if it would have worked wonders in the UK, but I should have made the decision or completely changed the business model faster. So those are a mistake that I made, and it's funny because back when I started Hardbacon, I never asked myself, is Canada the best place to launch it? I was just like, I know people in Canada. I have a bunch of followers in Canada because I used to be a journalist. So obviously, I'm going to launch it in Canada. And that's why I launched like a newsletter called Global Fintech Insider, and I'm having fun, reading all the fintech news from all over the world. Is you don't have like, especially, and also when I started Hardbacon, everybody, all the employees were inside an office. When at some point we had to fire everybody one by one, but at our peak in September when we were crushed by Google, like our CTO was based in Turkey. I had marketing people in Morocco. I had a writer in Winnipeg, and we're based, and our other employee were around Montreal. So basically, this idea that like, was it a Canadian business? I guess like half of our employee were based in Canada. So it really opened my mind, and I do think like fintech entrepreneur, especially because fintech is so regulated, so each country is different, and you cannot launch in multiple country at the same time. Usually, it depends of the space. So really research each country and launch the best country. So that was another mistake, I guess. But that's every time something happened to you, you learn from it, and usually you learn more from failures than from success, because it could have played out different. Like what if the update would have
Boosted
shot
you.
us to the moon? Then I would keep saying everything I did was a genius move. You know what I mean?
That's a very interesting self-reflection and self-awareness. I actually commend that. So that was actually my next question is what would you do differently? And you already kind of said that you would launch maybe somewhere outside of Canada or not necessarily in Canada. So is that the kind of like the one thing that you think like upon your reflection is that what would I do differently? Is probably launch somewhere else, or is there anything else that you would do differently?
So obviously, because before you do it, and I didn't know at the time that it wouldn't work well in Canada because I didn't have that much experience using the different APIs that do screen scraping in Canada, and they all saying that because they have salespeople, so the salespeople say it works wonders. Then you try the technology, and then you're like, okay, maybe this is the provider. The problem is this provider. So let's talk to the competitor that also say it works wonders. So we did test. So probably, given the information I have, I would do the same. But with the experience I have, I would have pulled the plug or pivoted faster and not just be like, oh, the government says open banking will be implemented next year. Let's just tough it out another year. Like obviously, government stuff, when they say something, it sometimes happen. In Montreal, for example, they're announcing a new metro line the east of the city for the last 35 years.
Mm.
So, and that's the thing. Like entrepreneurs are really enthusiastic, sometimes delusional. And if they were not, they wouldn't start a business. They would just try to get the best job they can in the market, and that would be a more logical. So I think you need to be a little bit illogical, but as you grow wiser, you need also to have a pessimistic side, even if like you need some kind of
Maybe realistic.
optimism. Yeah, yeah.
No, that's really interesting. So would you like what's your outlook on Canada right now? Would you encourage people to start a fintech startup in Canada at this point,
It
or
depends.
Mhm.
I mean, it's a small market, so I would say it's like not necessarily, but it's not necessarily a bad market. Just ask yourself, like, what is the regulation? Is the regulation is going to allow me to execute on my plan, and also is the demographic allowing me to reach critical mass to make money? Like another thing, uh, at the beginning of the company, we were more targeted to retail investor, and it's not everybody that invests directly in stock and read the research and so on. So one thing we realized is that the market was too small in Canada. So we could have decided, okay, like let's focus on the US. And a lot of Canadian companies, they start a company and they incorporate it in Canada, but they target the US market to start with. And since like it was so B2C focused, and I had a note, and it was like, okay, like I don't want to start just to be like an American app to start with. We have an audience here, so I do feel it's not bad to launch in Canada. It's just make sure like Simple, for example, have reached critical mass only in Canada. Their US and UK expansion didn't work out, but guess what? They have 60 billion under management just from Canadians. So for Simple, I think it was a great decision to focus on Canada. It just depends on like what is like your unfair advantage, and what's your plan, and does Canada allow you to achieve this plan. So I wouldn't say, like, some people are so frustrated and saying like, no, you shouldn't ever do anything in Canada. Well, there are nice business in Canada in the fintech space. It's just not every business should start in Canada.
And I think in our past conversations, we talked about like grants and how you were fundraising. Do you feel like the Canadian government, you being a Canadian business trying to serve Canadians, do you feel like the government could have helped you more? Like, have you tried seeking help from the governments in terms of loans or grants or anything like that?
Yeah, I mean, we did have some loans from the BDC, which is Crown Corporation, and from Investissement Québec, which is a provincial investment fund, but government controlled. Uh, no, I mean, my idea, and we did have some grants, because, if they're available, I mean, the entrepreneur job is to take as much resource as he can to make his vision come reality. So if that involves grants that exist, they should take it. But if you ask me, on a philosophical point of view, I don't think the government should be involved in business. So, like, I did get some help, but I wouldn't say, oh, I failed because the government didn't help me enough. I don't even think, and this is a leveling playing field. Obviously, if I would say, I'm not going to take any of the government help, and my competitor in the Canadian market would, then I would be at a disadvantage. So obviously, I took it, but I think that's innovation will happen even if the government is not there. And oftentimes they introduce distortion, and their money is complicated to get. And to some extent easier to get. Like, I'm not saying BDC will do loans that, a private bank wouldn't do, but I don't think, the government, made a big difference, even with the help we had. And I don't think they should have done more. I think, philosophically, I think they should have done less. But obviously, when I got the checks, I was happy.
Of course, of course. That's interesting. And I would say, like, what's the biggest lesson that you've learned from all of this experience? Like, what's the one kind of takeaway that you're going to be carrying for the entire life now from this?
It, it's funny because like I had my previous business, it was the same lesson, but I think it's the lesson so important that everybody needs to, if you're an entrepreneur, you need to incorporate it and grasp it. It's just listening to the market. And it's funny because I thought I had this lesson like in a previous business. I was a book publisher, and I was really, really good at PR. And sometimes, like I'm obsessed with marketing, so I see everything through the lens of marketing. And I don't think it's a bad thing because, like marketing is what allow you to bring what you did to the people. But the problem with my publishing house is that I would get so much media attention for each book I was publishing, but I didn't, but a lot of those books didn't sell well
Hmm.
because I wasn't like my clients was, people going to bookstore, not media that invite authors on TV.
So it's just hype,
So,
but yeah.
so basically, like I was good at creating a product for media, but I needed to create a product for my end users, like why people are buying it. So with Hardbacon, I did a lot of customer, discovery, and I tried to do that. And that's really important. Talk to people, try to understand who they are, build customer personas and target them. The problem is that there's a big difference with like, doing this work with just pre-product and then launching the product and seeing what happened in the market. And I did learn this lesson of like being more, trying to think about my customer, talking to my customer, and designing for the customer. But I do think that like in the example of the budgeting app that would disconnect, I should have more quickly realized, oh shit, we don't have traction in the market. We need to change fast because, like obviously I knew, the cause of the issue, but it's so important to wait and do more of what your clients want. And that's why a lot of business start, with one thing like Slack started, I think, as a video games, and then nobody wanted their video game, but the employees loved the little messaging app they built internally.
Oh,
So
wow.
so really listening to the market is really important. And we did it at Hardbacon. Like for example, like we started like the content we had market, product market fit. A lot of people wanted this content. And we started to do like surveys and infographics, and people like to consume that. But on the product side, I think we should have moved faster, and because there's a difference between what people tell you and how they behave, and it's really important to just like really listen to people, and not only like do it really fast, basically. Because if something, if you don't see people that are really passionate about your product, then you don't have a product, and you need to change it as fast as possible. And that's like I knew it, but it's just a big reminder of like really listening and of what people do with your product. Like maybe we could have become, like one thing that we were doing, for example, and I didn't pursue that, but we were doing little quiz about finance. People love that. And
Hmm.
and at some point, like you're busy raising round, and like you have to fire some employees. So we kind of stopped the survey. You know what I mean? But
Hmm. There could have been something
and
there.
I'm not saying like we should have become a survey company, but that's the example of like really listening, because you don't know what's gaining traction. Sometimes just one feature of what you're doing is what people really engage with, and you should zoom in and just focus on that. And the other mistake we did at some point at the beginning, and advisors told us, and I ended up listening, is we were pursuing like B2B sales and B2C. A lot of people told me don't do that. Like how can you be so laser focused on two different entire markets, one of enterprise that want software, and another one of users that want to solve a personal problem. It's a question of focus. It doesn't mean that you cannot like if you're a large organization, probably you could have a B2B business and a B2C. But as a small organization, as a startup, that the default is being dead, there's no way, you can be laser focused on like two different markets. So those are, a couple of the lessons that I learned. And then, there's always a lot of the older learning is basically like practice. Like it's not a big principle, but like a lot of little things like I would do different just to save time and move faster. Uh,
During our previous conversation, you've mentioned that you've started with the co-founder, but then you parted ways with the co-founder. And then after that, in the past, like in the last couple of years, was it just you at the top, or did you
yeah.
have anyone to check you? Like, hey, like, don't forget, don't focus on two things at once, like, or was it just you?
At the beginning, I had the advisory board, which is an informal board, basically. Because if you have a board, like you need to provide like board insurance and some form of remuneration. So it's kind of complicated and heavy to set up. Advisory board, everybody can do it. But to be honest, like I was so running that at some point I kind of lost contact with the my advisory board members. And yeah, like my co-founder, I think we parted ways maybe like a year within the
Right.
first year. And that's another thing I learned at the beginning. I actually spent a lot of energy trying to find business partners, and the mistake that is so obvious to me now is that I was approaching people that never had, like, were never all in a business, like, never took this risk. So even if they were saying, yeah, like, I can go without the salary, yeah, I'm willing to do the sacrifice, it was not true. And basically, like, for my next business, because I told you eventually I'm going to do a business, it's a big, if you have co-founders, your likelihood of success are higher. However, your likelihood of, infighting and so on and friction are also higher. My number one criteria is I'm never going to consider partnering with anyone that was not an entrepreneur in the past, because I mean some people reach 40 and then will become a great entrepreneur and they never had, but that's one out of a million. So like most of them, they just are unhappy at their job, and then they think they want to be an entrepreneur, and like a month or 6 months into it they're going to be like, this is horrible. Let me
Right.
get back a job.
Right.
So that's for sure. And the funny thing is, like, since Hardbacon folded, I had conversation with multiple founders that either went bankrupt or their company didn't work out. And those are the people, like, I'm not launching something, but if I was, those are the people I would definitely go and work with, because they showed up. And I'm not talking about someone who abandoned after 6 months. I'm talking about people that did multiple years. Some of them raised money, some of them went and did something really great, but for a reason or another it didn't work out. Those are entrepreneurs. So you basically, if you want co-founders, they need to be entrepreneurs. And the problem is, especially when you do your first startup, you end up partnering with someone who's an employee, and even if they say they want to start a business, they probably don't. So that's like
Yeah.
so obvious, right? But it was not obvious to me 7
Mhm.
years ago.
So, but you wish you had a co-founder? Like you wish like during the capital like three
Yeah,
last year, it would be easier, you feel like if you had like
yeah.
someone to
I'm
share
not
the burden.
saying, if like I had really great employees,
Hmm.
and like Frédéric Roy, for example, who was the head of
Yeah,
monetization. Like
great guy.
I was relying a lot on him, and he's the reason like we survived 12 months after the Google update. Like he kept doing magic sales trick, not trick. I mean, he's just a great salesman, and we diversified our offering to our clients and so on. But yeah, I do think, because however great this guy was, like obviously, he wouldn't do the amount of hours and so on, because he did have some stock
Right.
option, but he was
He
not
was on
as
salary. Hmm.
exposed, yeah, like than I was. So yeah, for sure, having a co-founder is a good thing, and increase your chance of success.
I think another question for me, and it looks like the the screen a little froze here for a second.
Yeah.
Um, yep, there you go. We're back. Um, you have all this experience now, We talked last time, you spoke about fundraising, went to different meetings through some sort of connections you did here, and I was very impressed by that. And now you took this company like for multiple years through like all stages, the entire cycle. And yes, it completed, but it's a tremendous experience. Is there's like, and you're currently looking for, other positions, for example, like, is there anywhere that you can advise? Because I feel like you have so much advice in you. You have so much technical, like corporate bureaucracy advice, fundraising advice. Like, is there any way you can like become a consultant in that?
Yeah,
Because I'd love to ask you a
but
lot of questions personally, for example,
yeah, I
outside of
mean,
this podcast.
I did take like a small consulting gig, and as I'm looking for the right fit as a job, but I feel like the problem with being a consultant is that you spend a lot of time, like running after like finding clients, and like even if the hourly salary is higher, uh, the sailing part is not my favorite. So like if I had, you know, inbound for like 40 hours a week, I would be like, why do I need a job? I can just, take whatever mandate I want. But that for that reason, I prefer to look for a job. But in the meantime, and even while I have a job, I might do some consulting. But I don't, I see it more like a, kind of as a transition, more than like being a full-time consultant.
But I would even say maybe like a university lecturer, honestly. Like there's something there. Like I really would love to like like soak in more of that knowledge that you're having because I feel like getting the company through all the cycles and all the way to its folding, like
Not
it's
not all the cycle. I mean, the goal was to bring it to IPO, right?
right, right. No, that's true. You did mention that. Um, but that's amazing. That's such a fantastic story.
That's gonna be the next one. The next one.
Exactly. Like the optimism is what matters here, and just ending on the optimism note, it's so great that you're so motivated to start again because it inspires me as well. To make sure that when they say fail qu fast, fail quickly, and that really has a lot of value in that. That carries a lot of weight in terms of experience and just mental preparation, right? There's so many lessons that you have to learn, and that's what I'm trying to remind myself as well as an entrepreneur. So I really appreciate this conversation. I really appreciate your enthusiasm, and the fact that you are just moving forward. You're not giving up. You're planning your new company, and I will be here to kind of support you on that journey as well, whether through podcasting, resharing stuff on LinkedIn, or even investing. Thank you.
Thanks, Samir.
Thank you so much, Julian. I appreciate you. And
Pleasure.
is there anything that you'd like to mention to our listeners and viewers, perhaps like access to your newsletter or any other websites or
Yeah,
resources?
like if and they're interested in fintech, they can go to globalfintechinsider.com, long URL, and subscribe. Like every week, I'm basically summarizing what I think is the most interesting fintech news and add my little grain of salt because I make little, I put a little line between the dots of what's going on because I have some experience. And yeah, that's basically what they can do if they're interested in fintech.
Fantastic. Julian, thank you so much for being on this podcast.
Thank you.